So Leonardo, I was thinking about our new Optimum portfolios and how we could easily explain them to our viewers. And I was thinking about the World Cups and the Ghose family. We used to pick our own favorite teams from all the players that were around, trying to pick the best players for the best positions. And then we would have a competition at the end to vote who had picked the best team. And I was thinking that the Optimum portfolios are very similar, and that we pick from the very best funds available around the world.
Yes, exactly. Optimum is a quantitative strategy based on a macro factor model. Each portfolio is designed to maximize the return for 3 specific risk levels, and the asset allocation is tactical because we rebalance our exposures depending on the macroeconomic environment, business cycles, and market sentiment. But the key distinguishing feature is that these new model portfolios go beyond drawdown protection. In fact, enhanced diversification is achieved through multi-asset diversification, so across equities, bonds, alternatives, properties, and cash. Multi-manager diversification, because we don't buy only Cantor Fitzgerald fund. As you said, we select globally from leaders such as BlackRock, Schroeder, First Trust. And lastly, multi-style diversification. In fact, depending on the market outlook, we adjust our equity exposure considering factors such as value, income, high yield, low volatility, or quality.
Sounds great, Leonardo, and maybe a little bit complicated. So perhaps you'd like to explain to our viewers how we have just put all that together into 3 simple portfolios.
Yes. So Optimum Cautious is designed for investors with a low to medium risk appetite because most of the portfolio is invested into defensive assets, so fixed income, alternatives, and cash. And over the last 3 years, the strategy has returned about 2.5% per annum. Optimum Moderate is intended for those investors with a medium risk appetite, but that are also willing to accept a moderate level of portfolio volatility. But anyways, the portfolio is balanced across fixed income, equities, alternatives, properties, and cash. And over the last 3 years, it has returned about 6% per annum. Optimum Growth is appropriate for those investors with a medium to high risk appetite and that are willing to accept a potentially high level of portfolio volatility because it's mostly invested into equities and we try to profit from different factors, styles, and thematic opportunities. And over the last 3 years, it has returned over 10% per annum.
Well, Leonardo, those figures sound really good, and they do hide one of the more important aspects of our portfolios, and that the drawdowns or losses during times of extreme volatility have been very low, and that explains partially why the returns overall are very good. So these new Optimum portfolios are now available to Cantor Fitzgerald clients, and if you'd like more information on them, please contact your Cantor Fitzgerald advisor.